morning. You're listening to Insurance Matchmaking, your path to health, life, and Medicare coverage with Matt Libby Insurance. And now, sharing his knowledge, here's your host, Matt Libby.
Good morning. Welcome back to Insurance Matchmaking. Today's show is going to be, I don't know, a little different. Probably some of you would say it's just like more of the same. But I've got some guests lined up here in the future. Today, I'm just kind of doing a show to probably just recap a lot of things I've talked about before or just reiterate some things. But have this show as a backup to when I can't make it in to record or I don't have a guest coming in. I was fortunate that the most recent guest I had, I was able to get 2 shows in. So we're one up, and so today is a great day for me just to go ahead and still do a recording. So we've got one, if I get sick or I need to go out of town, whatever, this show will be there. It's just kind of ironic. We had the fair recently, and that was, oh gosh, that was tiring. It was so hot. But we had a good time, met some new people. I got to meet Jesse Flowers. If you listen to this radio station, you probably heard him. He's the minister at the Jerry Whitson Road Church of Christ. And it's the first time we had met was at the fair, even though we just don't seem to cross paths when we're coming to record here at the radio station of that. But we were talking, and I told him, I said, it really helps for me to have a guest, but sometimes I have to, just preach insurance. So today I'm going to be preaching, hopefully not too much stepping on too many toes, but just talking about things that I think are important and could be, like I said, sometimes things you might not be thinking about and trying to get you to think about them. And not just so I can make a sale. I think that's one of the things people avoid, insurance people, because we're just trying to sell you something all the time. Well, yes, that's how we earn our living. So it's important for us to do that. But we also want to make sure that you're protected and that your family's protected. You don't know how as much as people misuse not using the right there when they're writing. Whether it's THERE, THEIR, or THEY''RE, and not knowing which one of those to use. Those irritate me. So those are one of the things I see on Facebook, and it just, I don't know. I know I probably overreact on a little more than other people, and I really want to say something, and I don't. But the other one, I hate the crowdfunding programs. It's not life insurance. Take a little preparation. It's not that expensive. I affectionately or unaffectionately call it Go F Me, just because, and that way I can get away with not saying the name and still kind of slamming it. I can remember growing up, we had a little country store, so I can remember having, the milk jug or the mason jar on the counter, with a name on it, and people would put their change after they paid for their groceries or their gas and put in the jar because somebody passed. But usually, I don't know, maybe it was a naivete on my part, but most of the time I always saw that because, it didn't raise a lot of money. It was more of, hey, we're collecting the money so we can send flowers to the family, or just kind of a little something to help them out in this time of sadness, not trying to pay for the funeral. And of course, they've just gotten more expensive, and it's one of those things. The funeral business is a good business to be in because eventually everybody's going to be your customer. Whereas mine, people decide not to get insurance. They decide not to get insurance. They're still going to pass away, and they're still going to need someone to service the family to take care of those needs, whether it's cremation or burial or transporting to another state. There's a lot of things that come into play, and that's why, like I said, I try to preach insurance. We have to get it on our cars. We have to have the liability because the state mandates it. That's something that's happened in my lifetime, and probably a lot of my listeners also can remember when car insurance was not mandatory if you didn't owe on it. Of course, the lenders are going to make sure they're protecting their interest, and they're going to make sure that, if you wreck your car, the loan will still get paid off. And the same thing with your house. If you get a mortgage, they're going to say you have to cover it because if it burns down, they want to make sure they still get back what they lended you. They don't really care about whether you have a place to live or not, but boy, they sure want to make sure that they get their money. And I say they, obviously, most people would care that you have a place to live, but the people who are just looking at the bottom line, they're thinking about their bottom line much more than do you have a place to live. So my thing is I kind of have to get people to be thinking about, well, why aren't you insured? You insure your car, you insure your house, You insure your phone. And I was thinking about, the cost of what it costs to add, like the insurance for the loss or damage or stolen insurance on your cell phone. And of course, and it makes sense. They're expensive now. It's not like you used to be able to go and get I guess you still can maybe go and get a $50, disposable phone, or what do they call them, burner phones. But if you've got a smartphone, a Galaxy or an iPhone, something like that, you're spending over $1,000. Or, and again, maybe you're not spending it, but you're committing to that contract and maybe paying a little bit each month towards that. And so, yeah, you something happens to it, you don't want to have to fork out the money to get a replacement, so you pay the head insurance. You can have some halfway decent life insurance policy for probably about the same amount of money you're paying for the insurance on your phone. If you're young and healthy, non-smoker, let me stress the non-smoker part, you probably can get, even $100,000 of life insurance for less than the insurance on your phone. Definitely less than your car insurance, especially when you're young, because it's always higher. So that's one thing. And I run into a lot of times people, well, I'm not married, I don't have kids, I don't need life insurance. What if you don't die? That's, if you're in a car wreck. I've got clients that have an adult son. They're both in their 60s, and their son is in a wheelchair after a traumatic brain injury from a automobile accident when I think he was either late 20s, early 30s. He's in his 40s now. And their big concern, too, is, what do they do now when they can't take care of him anymore? They're now, a lot of times in situations like this, someone who is in a situation like that, they may not outlive their parents, even though they've survived that accident. But they do have that ability to take care of them or to set something up. And so a lot of times, they may want life insurance just to make sure that their disabled child is still cared for. The other thing we run into a lot is people, with getting insurance for children, and people are like, well, I don't need to profit off my child passing. But one of the things, actually really important thing, is that guaranteed insurability. That's one of the things I think is a big deal. And I don't make a lot of money off them. So it's like, I would have to write hundreds of people's, newborns to make any substantial profit from that. But you have that guarantee, generally when they're newborns, they're healthy and you can get insurance. And something changes when they're older. Diabetes happen, cancer happens, things like that. Usually you see as healthy children, and then all of a sudden they're not healthy anymore. And the beauty of if you have a policy on them when they're a young child, they can keep that policy. And some of the plans are really unique. I've got one company, you write the insurance, and it doubles. The coverage doubles when they turn 18 with no increase in the premium. And then most of the plans will have not reinsurance, that's not the term I want, but you can increase the benefit like every 3 years. So like when that child turns, some of them are when they turn 18, some of it's when they turn 21, and then every 3 years after that, you can add the face amount of that policy to the policy. So if you say you got a $10,000 policy on your child when they were 6 months old, well, when they're 21, they can double that to $20,000, and then again when they're 24, and then when they're 27, and every 3 years they can increase that to, and it doesn't matter what their health is when that happens. So they could be deathly ill, they could be, have a terminal diagnosis, and I want to leave another $10,000 to my family. They can increase that with no health underwriting whatsoever. It's guaranteed that at that year mark, that anniversary mark, they can add that base amount to it. But it can only be done then. So if you miss that time, that window, then you have to wait another 3 years to be able to increase it. The other one, some parents will put money in a plan, very substantial amount, $50 to $100 a month, but it's life insurance. And that life insurance builds cash value. And when that child decides to go to college, if they decide to go to college, you can take a loan out and pay for the college and have no student loans. And they still have the life insurance. It's still building value. You're still putting in your $50, $100 a month in it, or maybe they are now that they're an adult. and they have a very nice nest egg when they hit retirement. Or, like I said, maybe they don't go to college, go to trade school, and now get married, and now they're ready to buy a house. They can borrow against that life insurance to, down payment, or possibly even pay for the house, depending on how much money has been built into that life insurance plan. So there are other reasons to get life insurance than just, hey, my spouse is going to get the money when I pass, which is great. They need help paying off the house. I remember a podcast I was listening to, it's even been a couple of years now, talking about, because one of the things I do, and I do more of probably when it comes to life insurance, what they call final expense. It just kind of goes along with when you work with Medicare clients like I do, the final expense, questions come up. And the final expense insurance is basically just burial expense. But sometimes it may be for other things or to pay off some debts. But the problem is you've got two couples living on individuals as a couple living on a fixed income. And when one of them passes, they lose half their income. Now, sometimes if the spouse that was drawing more passes, the surviving spouse can collect their Social Security, but it's only one. They're not getting the two. And that could actually force the person to have to move out of their home. Whereas if they have some life insurance, or if they may need to downsize, but they don't want to have to just let the house go for the lowest bidder because they couldn't make the payments. So that's one of the ways that the final expense can help out those individuals. So we're getting close to our commercial break here. So I'm going to change and give you a different insurance sermon in the second half of the show. But we've talked about life insurance. I'm going to talk about some of the other supplemental ancillary kind of things that we do in insurance. And just like I said, just kind of recapping some of what we have to offer at MetLibby Insurance. So we'll be right back after the break.
Hi, this is Mark Gall, your local business solutions consultant with Twin Lakes. Is your business ready for a boost in productivity? Looking to elevate your customer experience? With Twin Lakes Gig Speed Fiber Internet, you can do all that and more with fast, reliable service, backed by local 24/7 support. We've proudly served businesses in the Upper Cumberland for over 70 years, and we'd love to serve yours. Give us a call at 1-800-644-8582 or visit us online at twinlakes.net.
Hey, college students, ready to ace your dorm or apartment setup? Dive into your local Habitat Restore. Uncover unique, budget-friendly furniture, decor, and essentials that make your space pop, all while supporting a great cause. From trendy finds to classic pieces, Habitat Restore has everything you need to create your perfect pad. Plus, you can even donate your items that you're no longer using. Stop by Habitat Restore today, off South Jefferson Avenue in Cookeville, now with extended hours. Shop smart, live well, and make a difference.
And now, back to Insurance Matchmaking with Matt Libby Insurance.
All right, we are back in Insurance Matchmaking. I said I was preaching the last segment about life insurance. The other one I would touch a little bit on is insuring your income. If you got it through your employer, a lot of employers will offer, payroll deduction. You can get a short-term or long-term disability. I encourage you, if that's available, get that there. The rates are generally going to be lower than what I have to offer, and they also are going to be usually guaranteed issue. So they're not going to ask you the health questions. I have two kinds of disability insurance when it comes to that. We have guaranteed issue, which would be accident only. So it's great that it will pay if you get hurt and can't work. But say you get very ill, things like cancer, leukemia, arthritis, some of those things that can be disabling, but they're not accidents, and they're based on your health. And I mentioned rheumatoid arthritis. It doesn't matter, that you had a heart attack, so you can't get something that would cover you for that because it's a health portion. So you may have to settle for that accidental. The other thing I mentioned on that, I didn't mention when I was talking about the life insurance, is a lot of times, for what they call mortgage protection, sometimes it makes sense to go ahead and get and it's guaranteed issue, is accidental death policy. They're very inexpensive compared to traditional life insurance that is underwritten due to health. They don't care if you're a smoker. They don't care if you weigh 400 pounds. it's only going to pay if you die in an accident, not from health conditions. So like I said, they can be very inexpensive, but they can still help cover that rent if something happens, say a car wreck or something like that. So it still makes sense to get some kind of life insurance, even if you're not healthy. And then depending on your age, there are what we call guaranteed issue plans. That's more, again, with those final expense. The disability insurance, that's usually falls into what we call the supplemental insurance, and also referred to as ancillary. And sometimes it gets a little confusing. We talk about Medicare, and then we have what call the Medigap plans, and their true name is a Medicare supplement. So sometimes when I say supplement, that's what people think. Oh yeah, I got a Plan G, and it's like, oh no, that's not the kind of supplement I'm talking about. I'm talking about a cancer plan or an accident plan or a disability. Generally, if you're already drawing Social Security, especially if you're over 65, you're probably not going to get a disability plan. There are a few companies out there for people that are still working that can get disability insurance over 65. They're, of course, going to be more expensive. So it's a great idea. Any of these things, I always say, get them when you're young, especially if you're young and healthy and non-smoker. Most things are going to be very inexpensive. Some plans, like an accident plan, an adult's an adult. There's one rate for whatever the insurance is, because again, they pay out a flat amount. You may have a $10,000 accident policy, or $5,000, or $25,000. That's what they're going to pay. So they're going to be a flat rate, and it doesn't matter if you're 25 or 55. The policy is the same, even though, knowing myself, over 55, I have a tendency to hurt myself more now than I think when I did when I was younger. And then again, some young people do a lot of things where they take more chances and get hurt. So those are some things that can come into play. But they're very inexpensive. And if you watch the duck commercials with Saban and Sanders and talk about filling those gaps in your insurance, you probably have health insurance. If you hurt yourself and you go to the urgent care, the emergency room, your insurance is probably going to pay at least most of it. Sometimes it's not going to cover everything, and that's where an accident plan can come in handy, because it'll help fill that gap that your insurance didn't cover. The other thing, we talked about disability. Sometimes you get hurt, you can't go back to work for a few days. So there's policies like that they reimburse you. They don't pay the doctor, but you do have to have the doctor's bill to prove that you had the incident and then get reimbursed. Cancer insurance, that's probably one that I probably harp on more than anything. As men, we have 1 in 50% chance that we're going to be diagnosed with cancer. Women, it's 1 in 3. And the treatments can be expensive, and generally, again, somebody's on Medicare, and, well, I've got a Medicare supplement. Why do I need a cancer plan? Isn't my Medicare going to pay for my treatment? Yes, generally. Sometimes there are things that will come up to be considered experimental, and if you got cancer, you want to beat it. So you're going to probably figure out a way to pay for something if your insurance doesn't. The other thing is sometimes it's, hey, I'll just use we know the name of the place, MD Anderson in Texas is renowned for cancer care and cancer successful treatments. So some people might say, hey, I'm going to go there. I heard they're the best. That's where I'm going to go get treatment. Well, it takes money to get there. Your insurance isn't going to cover air travel or gas if you drive your car. You're probably going to stay in a hotel, or you probably have someone going with you to stay with you. There are policies that actually reimburse that'll actually pay for you to have a companion go along. So you see, there's kind of two different kinds of cancer plans generally. You have your lump sum pay on diagnosis, and that's the ones they usually couple with like Medicare plans is, hey, sorry you got cancer, here's a check for $10,000 or $20,000. For $1 a day, you can have at least $10,000 worth of cancer insurance. And some of them are very simple in their underwriting. They don't. Some ask if you smoke. Some will ask if you have family members have a history of cancer, and then other ones are like, "Hey, have you had cancer in the last 5 years?" And that's about it. There's a couple other questions, but that's kind of the harshest. I always think it's kind of weird. The other question, a lot of them will be, have you tested positive for HIV or AIDS? And I just always find that one a little strange. I guess they're kind of related in how they attack your body, but those are kind of the questions you have for the cancer plans. They don't ask about your other health. You can have some of the plans. You can have COPD. You can have diabetes. They don't even ask. And then there's other plans that will ask all those questions. And the thing is with those plans, they're generally going to be a little bit less than some of the others. So you might even get more cancer coverage because they're more stringent on who they will approve. And one of the reasons I especially encourage it for Medicare, even those with a Medicare supplement, we used to talk about how, you get cancer drugs, they can be really expensive, and there was no maximum out-of-pocket protection on your drug plans, which that's changing this year. Could change back again after the election. Who knows what happens after elections? So it's not a bad idea to have it just in case, the cancer drugs end up being not covered by a maximum out of pocket, or that maximum out of pocket generally goes up. So you're still going to have some money out of pocket for something like that, and it's nice to have that in reserve. The other thing is, if you're on one of those Medicare Advantage plans, and I tell people they're a pay-as-you-go. I'm not trying to bash them. I do Medicare Advantage and I do Medicare supplements. I help my clients decide which they feel is going to be the better fit for them. And a lot of it, that zero premium is real attractive. But the thing is, they all have a maximum out of pocket, and there's a lot of things you're going to pay 20% of the cost. Cancer is one of them, and so you're going to pay 20% of the cost until you hit the maximum out of pocket of that plan. Currently this year, that maximum could be $8,850. I haven't seen the number for next year, but I'm expecting it to probably be over $9,000. And I don't know too many people that get diagnosed with cancer in January, and by December they've completed all their treatments, and they're not going to have any of those expenses next year. So usually if someone has a Medicare Advantage and they're diagnosed with cancer, it's going to cover at least 2 years. They're going to hit that max out of pocket. So that's what the thing. It's very helpful to have that cancer plan, because the number of people especially, I talked about the 1 in 5, 1 in 2 chances for men. And if you haven't been diagnosed with cancer yet, your odds are going up that it will happen. So, it's very inexpensive to have that protection. The other is what we call a hospital indemnity plan. And what those plans do is they reimburse the cost of being in the hospital, and usually some other things. Some of them will have a cancer rider on them, but they'll also maybe reimburse for an ambulance, reimburse for the emergency room, for an outpatient surgery. They're kind of an a la carte, but the big thing is generally if you have a Medicare Advantage, you're usually looking somewhere between $200 and $400 per day for the first few days you'll be in the hospital. Now, you're probably not going to hit your max out of pocket, but you got to come up with $600 because you were in the hospital for 2 days. That can be a little tough. But if you're going to get reimbursed that $300 per day from your hospital indemnity plan, you don't have to worry too much about that bill. And the reason I bring that up is a lot of people go for that zero premium because they're looking at, if I go with a Medicare supplement, I'm adding about $200 on top of what I'm paying for my Medicare Part B, because they're going to pay $100 to $150 for their Medigap plan. They're going to pay usually from $10 to $30 a month on their drug plan, and if they want to get a dental plan along with that, because Medicare does not cover routine dental, vision, or hearing coverage, so they'll add what we call a DVH, dental, vision, and hearing. That's one of those supplemental or ancillary plans that will go alongside your Medicare supplement to cover those things. You're looking at $40 to $50 a month for those plans. Some of them are about maybe $30, but they're going to not have a lot of. They're not going to cover a lot of your dental for that cost. So usually I say between $40 and $50 for a good dental plan. So that's what I'm saying. It runs about $200. Like, well, I can't afford that $200. I need to get that zero plan. Well, that's great, but let's take some of that $200 savings and cover those incidental things that are going to happen. It may not happen the first year you're on there, but the beauty of the hospital indemnity plans and the cancer plans, once you buy that plan, the rate doesn't go up. Medicare supplements, the Medigap plans, they generally go up every year. And when you get older, you're at 65, there may not be a big deal. When you're 75 and 80 and 85, they get very expensive. If you have an indemnity plan to reimburse for those major expenses, it's a lot less. Generally, a real good hospital indemnity and cancer plan, I'm $75 or less a month. So I'm saying you're taking some of the money you would have spent on a Medicare supplement and covering those other expenses. In your Medicare Advantage currently, they generally have the dental coverage, so you don't need a separate dental plan. Some people do, depending on your Advantage plan, your dental may not be good at the dentist you go to. So sometimes you do want another dental plan instead to go along with that. You can have more than one dental plan. You could might get your preventive check from your Advantage plan, and then you get a Crown and you use your separate standalone dental plan to cover those expenses. So there's some ways that some of those supplemental plans can help on it. Just had a plan that's introduced with one of the companies I represent, and you can go all the way up to $10,000 reimbursement for a hospitalization, and that works for the under 65 crowd because that's what you're looking at is on deductibles or max out of pocket on a lot of your health plans. And some of the people take the short-term plans. We still can offer those till actually when this show airs, it'll probably be past that deadline where you can't get one that covers for 3 years. But some of those plans have a $10,000 deductible. So if you're in the hospital, you have to come up with that $10,000. So it might be helpful to have a plan that will reimburse for that. And usually what I encourage people on those plans is look at how much you're spending to get a lower deductible on another plan that you're probably not going to hit unless something catastrophic happens. You can get a supplemental plan that will reimburse for a major event for less than going with a plan with a lower deductible. So I'm generally not asking people to spend more money to get more than one plan. So if you have a high deductible plan, give us a call. That's something we can look at. There's no enrollment periods for those. I think that's the other thing. A lot of people think, I need to renew my dental plan. I need to renew my vision plan. Or what? You can change your dental plan or vision plan any month of the year. You can add a dental or vision plan any month of the year. So any of these supplemental plans I've been talking about, there is no enrollment period. There is no annual re-enrollment. Once you buy that plan, they're guaranteed renewable. Every month you pay your premium, they're renewed. Again, some people like to go where they do annual billing, but it will renew annually as long as you pay that bill. You stop paying the bill, it will cancel on you. So those are the things we try to make sure that we get everybody to consider and, be properly protected. So we're coming up on the end of my time here. Don't forget insurancematchmaking.com. Please like and subscribe to my YouTube channel. If you go to the website, the past shows are on there. You can click on those, like them, comment on them. Love to see your comments, get some feedback on what we're doing here, and please share Insurance Matchmaking with your friends and neighbors. Until then, see you on the radio.
You've been listening to Insurance Matchmaking with Matt Libby, your path to health, life, and Medicare coverage with Matt Libby Insurance.